Welcome back. Let's get straight to the management of ICICI Lombard. The company's posted a steady quarter even as claims rise with return of normalcy. To discuss the quarter gone by, we're now joined by Bhargav Dasgupta, who's the MD and CEO at ICICI Lombard General Insurance. Thanks a lot, Mr. Dasgupta, for joining in. I'm looking at your numbers, and out there, the combined ratio, that's come down to around 103.2. This compares with 104.5. But it's still at elevated levels. Year on year, it was close to around 101.8. How do you see this trending, and can it at any time go below that 100 mark? Because, once it goes below 100, we understand that it's profitable. Above 100, still loss-making.
Thanks for having me, Mangalam. And just to answer your question, you're right that, over last quarter, there's been an improvement. Now, I'll just set the context. If you look at the last year similar period number that you're comparing, today we are integrated with the Bharti AXA business. When we had announced the transaction, at that point in time, Bharti AXA's combined was 120, and we had said that when we integrate, it will come to around 104, and it will take us a few quarters to bring it in line with our normal numbers of close to 100%. So you have to see it in that context.
So how
if you look at moving ahead, clearly we will see combined ratio improve. We will have to decide how fast we want to do that, because we are also investing heavily in terms of some of our distribution channels. So if you look at what we've talked about, this year, we've added, we've kind of offered about 1,000 people to run our health agency team, of which 750 have already joined.
Yes.
Now, when people come on board, it's a incremental cost. You don't see the revenue immediately. So that's an investment that we are making. Similarly for digital, this year we became the first large insurance company to move our entire applications and technology to the cloud. So we have a kind of a double whammy in the sense that migration, we are maintaining our on-prem system, we have the integration going. So all of that will take a bit of time. So, but directionally in the long term, clearly focuses on sustainable business.
All right, Mr. Dasgupta, let's get back to the point then. How soon can you get to 100? Sometime in this year, or do you have some guidance that you could give us? A particular quarter that you have targeted?
No, I don't want to specify any particular quarter. It's difficult to predict that. But the point that I'm making is that it will take us a couple of quarters to streamline and get the benefits of the synergy for the two entities.
Okay.
That we believe should happen during this year. Okay. We are expecting significant synergies, but in terms of the investment that we are making, that will sustain for some more time. Okay. So it will take a bit more time than a few quarters to come back within 100.
Okay, all right. The other question I had is that your loss ratios across the motor, third party, your OD as well as your health, they're all higher on a sequential basis. How do you see these trending with the country normalizing post-COVID?
So if you look at, let's pick up health, right? So as an industry, collectively we paid about 25,000 crores of health claims. And if you look at the industry's profitability, we make roughly about 4,000 to 5,000 crores as an industry. And this is one industry which has taken this large a shock, hasn't gone back and asked for any help from anyone. For us in ICICI Lombard, we've had roughly about 550 crores plus hit because of COVID for the year. Just for this quarter, the wave 3 impact has been there. Not obviously as big as the wave 2, but still about 27 crores of COVID hit. Right. Our sense is that if I look at the retail book that we are writing today, the health loss ratios should come down going ahead, because this COVID impact we believe is we are hoping is one-off. And that will go away. On the motor side, on the third party, again, there is a pretty high inflation because it's driven by court orders. We've not seen a price increase from the regulator, because this is regulated, the price here, for the last 3 years. We are hopeful for a small increase that they're talking about, which we'll see this year. So again, we are hoping that the motor loss ratios will stabilize. We don't see it coming down significantly from this level unless pricing intensity or competition that we are seeing comes down.
On the pricing itself, can you quantify the kind of increase that you are anticipating in third party? And is there enough on the table for you to go ahead and take a price hike on own damage as well? And importantly, what does that happen? What does that do to your loss ratio there? I mean, if the small price hike that you're talking about, if you could quantify that comes by, how would that change your loss ratio there?
Yeah, so that's a great point. So if you look at the inflation that we see in third-party prices, there is no public data of what the inflation is, but our belief is that the inflation is a double-digit number. That's how we predict, and that's how we reserve. Different companies have different norms, but we believe that the inflation is double-digit, and that's how we reserve. But the increase that we are talking about on a portfolio basis that is being proposed by the ministry is about 3%. So in a sense, it's not really adequate. We have to do a lot more work in terms of managing the claims, particularly the fraudulent claims. These are court-ordered claims, so you can't do anything about the size of the ticket size of the claims. But what you can do is preventing the fraudulent claims that we see in the sector. So we are hoping that that is something that we will see benefit of. Secondly, we are seeing some improvement in terms of the frequency of accidents in this country. And that's been a secular positive trend. So in terms of number of claims also, we expect some reduction. So we think that TP loss ratios kind of, from what we've seen for the Q4, should hold, going ahead. On the own damage side, we've actually taken some small price increases, but that's largely to defray the inflationary effect that we are seeing on the repair side.
Okay, all right, Mr. Dasgupta, I'm just having a look at it, and on a year-on-year basis, your motor own damage share in business, that's dropped. How do you see this trending go ahead? Just to give a number, I think as a percentage of business, it's fallen closer to around 300 bips.
Yes, that's largely driven by the fact that if you see for the sector, motor was traditionally the largest segment. This year, for the industry as a whole, motor has become the second biggest sector. Health has become number one. Again, two drivers. One, because of the pandemic, health demand or health insurance demand has significantly picked up. So, that's one tailwind in favor of the health sector. On the motor side, on the other hand, we've had headwinds because new vehicle sales have been muted. Two-wheeler has had 2 consecutive years of degrowth. Motor, if you see, and that's largely, we believe, demand-driven. Motor, if you look at, it's been a supply-driven constraint. So new vehicle sales have come down. Our view is in the coming year, both should correct. We are hopeful that the supply constraint, will get ironed out in the next few months. And we are sensing that the two-wheeler demand is beginning to show some positive signs. So we hope that part will come back. So I think motor as a share will, go back up a little. But health, we believe, will continue to remain the biggest segment for the general insurance industry.
We take that point. Enough about the business, Mr. Dasgupta. Now a couple of questions that the stock market would like to know about the float itself or the flow in the stock. ICICI Bank earlier had indicated that, they're looking to lower their stake from 48% to around 30%. Do you have any indicative timeline of when that happens? Have you heard anything from them? That's one. And on AXA itself, Bharti holds, 3.7%. Have they indicated, an intention to stay invested or exit at some point? This is post-AXA deal, of course.
Yeah, of course. So coming back to the bank point, if you look at the Banking Regulation Act in India, a bank cannot hold between 30 and 50% in any entity. They can hold more than 50%. Or they have to hold less than 30%. So when we merged Bharti AXA and ICICI Lombard, the bank's shareholding came down to 40% as a consequence to the merger.
Right.
So they got a dispensation of about 3 years to continue within this range. After which time by which time they have to bring it below 30. So that's about 18 months away. And our sense is the bank will do what is good for our business in terms of the approach to dilution. This is something that is kind of mandatory, legally required, and that's why they're doing it. Coming to Bharti, I can't really comment on that, but my understanding from our conversations is that they've indicated that they want to be long-term investors.
Quick follow-up on that, ICICI Bank's stake can come down in 2 ways. One, they can either sell it or maybe dilute equity via some sort of fundraise. What are your thoughts? Will they be selling it or will there be any sort of fundraise? Because you are investing in the business as well, like you said.
From our perspective, we don't need to raise capital. We've not raised capital for a long period of time because the intrinsic business is, throwing cash. So if you look at our solvency, we are at about 2.45 times, while the regulatory requirement is 1.5. And we believe the solvency will increase because the COVID claim impact on the solvency that we had this year will hopefully not repeat in the coming year. So we don't need to raise capital for ourselves. But in terms of dilution, there are multiple ways of looking at it. One is, maybe, sell the stake, or, if there are opportunities for inorganic, acquisitions, that also could be another. I think we are looking at all possible, options.
Yeah.
Everything is on the table.
Okay.
And we will collectively do between the bank shareholder and us what is right for our business.
You hinted at something. Inorganic growth, something's on the cards?
We've always said we are open.
Okay.
There's nothing on the card which is immediately be something that we can talk about.
Okay.
If something comes up, we'll very happily share it with you.
And we'll be happy to have you on the show. Thanks so much, Mr. Dasgupta, for joining and giving us a detailed check in terms of your view on the business going ahead. Look forward to catching up with you rather soon. For the time being, though, we'll slip into a short break, but it's earnings season. So when we return, we'll get in the management of Raj Ratan Global Buyers. Stay with us.